Hello YouTube, Slacker Stacker here, and I'm here with Spencer at the Gold Rush Mercantile and Trading Company in Longview, Texas. He has been very kind enough to allow us to do a small interview here, so everybody say hi to Spencer. Spencer.
Hello.
This is the Silver Gold community. Now, in the past I did do an interview where I introduced Spencer and I asked people to write in questions. Anything you'd like for him to answer. So I do have a few questions. And the first one is from Memoru. Let's see. Does Spencer see precious metals as a merchandise, or is he himself a stacker or collector?
Well, a little of both. That's my business, of course, is the merchandise side of it and bullion. So that's definitely 80% of my business. But I do put silver back. I typically tend to stack bullion, purity stuff as opposed to collectibles. Most of the collectibles that I deal with are items that come in from estate purchases that I do, or someone selling out an estate collection that they have. And so I have a few of my customers that are into the collectible side, but about 75% of my customers are all bullion customers. They tend to buy it for the purpose of what it's there for is for long-term hedging.
Exactly.
So, instead of stacking that cash in a tin can or in a mattress, they put it in silver because it has much more of a stored value for it.
Exactly.
But I do run across some of the collectible stuff that we keep, and I stick back a little bit if it's unique. But I don't just collect just to collect.
Okay, and this is the same reason why I stack, is silver will never be zero. It's always going to be worth something, and like you said, it's a long term. It's not a get-rich-quick scheme where you can just buy it, flip it, and turn it around. Some may be able to get away with that, but I look at it as a long-term investment.
Yeah, it is. I'm a trend guy. I watch trends. That's part of my industry, to watch where the market's going, because it's all affecting pricing in gold and silver. And, one of the researches that I did, I started back with the amount of capital that the Federal Reserve had on their books prior to 2008. So there were approximately $4.7 trillion that the Federal Reserve had implemented into the system of available currency prior to 2008. Now that's from the time since their inception till 2008. Since 2008, due to the downturn in the market, the QEs that were done, the additional debt our government's gone into, we now stand at over $17 trillion worth of revenue that has been generated. And if you take that, that's a little over a 300% increase in capital availability for the U.S. dollar. Okay? If you take gold prices over a 15-year term, gold's increase has been 338% at that. So if you look at the correlation between gold pricing and the U.S. dollars available, the U.S. dollars went up over 300% in amount of available funds over that period of time, and gold followed it by increasing its price 300%. So although we've had $1,900 highs during that time, that's what we call the hot money equity bubble, where when the market started crashing, the dollar started crashing, then people had nowhere to put their money, so they pulled out of those things and they would go into gold and silver as a safe haven. So, what brought that back down is that once the market stabilized with all that additional capital in it and started making its increase, and then therefore the dollar follows it because it shows that the strength of the economy is getting stronger, if the stock market's getting stronger is the way they analyze that, then gold started devaluing itself from those highs. But the one thing that I found is inevitably you can go back as far in history as you want to go, and I'll just go 50 years previous in 1964 when they quit producing silver coins. Well, a silver quarter, in 1964, and a silver dime in 1964 for 35 cents, it would buy a gallon of gas. Today, 53 years later, that 1/4 will buy you a gallon of gas. So your 10 cents to the better, or $1's worth of value in silver 53 years later than you were in 1964 because of the price of silver. So, its purchasing, that's okay, its purchasing power is much greater a value than the U.S. dollar is, and that's the only way we have to spend money in these days is through currency. So it's definitely a hedge against the cost of inflation over time.
Our next question comes from across the pond.
Oh yeah?
Yes, this is Big Laurie. He's from Scotland. He's known as Big Laurie and the Boy. They do great videos and they are hilarious. But he has kind of a funny question, and I think with Big Laurie, if you knew his humor, you know it's more of a joke. But does Spencer ship to the UK?
Well, I will ship anywhere that wants to receive it and sends the funds ahead of time.
So there you go, Big Laurie. There's your answer on that one. And Oaksy, your question's next. He's also across the pond. This is Oaksy88 from England. Oaksy asked, do you have a verifier? He also asks if any downward movements in spot prices could potentially put a LCS out of business, local coin shop. He wonders how you got started in the coin business, and in all the years of operating, do you recall your rudest customer? The last is just for laughs.
Yeah, I can address those issues. Let me catch that phone.
Yes, I'll pause the video here. Okay guys, we're back. Spencer had to take a phone call. This is a business and this is on his time, so we got to abide by his rules. But again, let's we have that question from Oaksy88. I'll repeat it real quick. Does he have a verifier? Downward movements in spot prices could they potentially put a local coin shop out of business? He wonders how you got started in the coin business, and after all these years of operating, can you recall the rudest customer?
Well, as far as the verifier goes, we have several processes that we go about verifying coins, whether or not they're authentic or not. There's weights, there's acid tests, there's machines you can hook up to them. Typically, I found that the best is the acids. Even some of the coins that you use the machines with, if they've had a heavy plating on it, like a dipped plating, like a lot of the bars and all, they'll dip in a high carat, and so it can fool the machine at times. Typically, the acid test, because you're scraping it, it pulls all the particles out of it and breaks that initial little barrier there, so it gives the most true. I very seldom have ever been fooled through the acid. I have been fooled through the machines and other sources. But weight is another key element, because whenever they use other materials to say fake a coin, it's very difficult for them to get the true composite of silver weight by the size and the weight. So in order to cast it in the same size, they can only use that diameter that's there, and those metals may not weigh as much as what silver would, for example, so therefore there's no way for them to get the weight exactly right. So you take a Morgan dollar, for example, that may have been fake. They normally come in at 0.65, 0.75, when a standard coin should be 0.875. So there's several ways to verify, a coin's authenticity. Now, if it comes in a graded case, then at that point we have an X-ray machine that we can X-ray it and verify whether it's silver or not.
Oh wow, I didn't realize you had an X-ray machine for this.
Yeah, so basically that, and also because I am a broker and I deal with other larger houses out of Dallas and the market to move a lot of this merchandise through, those guys, several of them are PGCS graded, certified. They can look at cases through a telephone picture and tell you whether or not it's authentic a lot of times, or they can look at the coin itself. And because something that's faked is typically going to be a coin that has a higher value than just a standard, bullion price coin. Say a high-end Carson City, for example, that's a mint state 63 that might be worth $3,000. There's certain details in it that they look for. So I can actually take a picture of that with a microscopic clip that goes on the phone. It's like for diamonds and things of that nature. And it gets so much detail on it, they can actually read that detail through that picture and tell whether it's a fake or whether it's real, or if it is unsure, then we can always have it tested with the X-ray machine. As far as the gold and silver pricing affecting a coin shop's ability to stay in business, it doesn't really, that is less of a factor. Demand is more of a factor than the pricing is. So because the premium typically adjusts based on where the pricing is. So we've had examples when silver was trading at $18, $19 an ounce, and all of a sudden in a matter of a couple of days it dropped down to below 16. We had a huge amount of impact on demand, to the point that silver eagles were on an 8-week back order.
Wow.
Bullion coins, rounds, were 4 to 6 week back order. In 2015, if you'd have walked in this store in August of 2015 with $1 million check and said you wanted $1 million worth of 90% coins, you wouldn't have been able to get them.
Wow.
There was not a warehouse anywhere in the United States or in the world that would provide that, because they were on a 13-week back order, and once they reach a certain length, they had to stop taking orders. Well, during that time, to try and slow down momentum, they raised the premiums on it. And same way with the eagles. So it's all relative. The pricing is more relative to supply and demand, creating demand for it. Like currently, the market's been pretty subdued over the last year and a half.
Right.
So the people that we see more now are your more serious investors or your more serious collectors. I'm seeing more, I would say, younger to middle-aged people starting to pay attention. They don't have the resources just to buy a lot, but they recognize from going through the previous financial downturns that we've had that it's important for them to have something. And they heard about silver then, that they got in too late. Now they're trying to accumulate a little bit. So pricing has some value in it, but it's not the whole. If a coin store goes out, it's typically because the loss of demand for their product in the market that they're in. Internet has become a large part of that. It's that if there's anything that's probably put more coin stores out of business, it's been the internet, not the pricing of gold and silver.
You're seeing a lot of that with brick and mortar stores like Amazon and all these other guys.
Yeah, so you've got to be in that digital trade, and which we're moving in that area ourselves. When cryptocurrency came out a couple of years back and started gaining a lot of momentum, that put a dampener on the demand for silver and gold, because your typical investors that would have been going after gold or silver started moving into the cryptocurrency world. But like everything else, every bubble pops. It goes to 19. They're talking it's going to hit 50,000, and it's at below 7 right now.
Right.
So the main difference between those two is crypto is what you see in this hand. Silver is something that you can actually utilize and turn into a real commodity in the long run.
There's a term that floats around the silver community. It's used a lot on Salivate Metal's channel. Is if you can't hold it, you don't own it.
That's true. That's true. That's a large part of the paper market. Pricing of gold and silver is more manipulated through paper currency, like the paper COMEX gold and silver holdings, because banks can accumulate so much paper because there's no physical trade in it. It's just all digital and it's on paper. So I'm buying $100 million worth of contracts. Whereas if I bought $100 million worth of silver, I've got storage, I've got transportation, I've got delivery, and all those things that come into play. So your larger financial markets tend to move when they hedge their monies. They're not hedging it in physical. They're hedging it through the paper COMEX, gold and silver COMEX. And so that's also why you see abrupt changes in gold and silver prices at one time. For example, in the UK, I'll use that as an example. You know, more times than not, when you see gold take a dive or silver take a dive, if you go back and look at the trends and the timelines that those things happen in, it happens about an hour to an hour and a half before our market opens over here, following the European market. And the reason is because bankers at both sides are all part of that larger picture. And I'm not trying to start any type of conspiracy theory or anything. This is just facts. It's all about business and numbers. So basically what happens is they need to move their positions around, so they need to gain money right before close in order to be able to settle the positions that they have in the market. And to do that, they may sell $100 million worth of gold in 5 minutes on the paper market. Well, anytime you put a lot of product into one avenue in a short period of time, the price drops because you're throwing it out there saying bid on this until it sells out. Okay? And so that's why the prices drop, is because they put so much at one time that it puts pressure on supply and demand, and the pricing starts dropping on it. So when you see the price drop in gold and silver, it has more to do with the movement of paper as opposed to the movement of physical. So if, let's say that gold and silver did get hammered down and gold dropped $60 and silver dropped $3 an ounce. Well, that's okay, you know, for me. It's really good for me because my premium is going to be based on the same ounce that's being sold, not the price of the gold or silver. But what it does do is it creates a lot of physical demand, because while the prices are low, people who collect physical start collecting it. And so, you know, there's a side to each part of that. Yes, if it gets too low, people lose interest, they quit buying. This demand side that starts falling off, that doesn't create enough revenue source, not necessarily the price of silver or gold. I got started in the industry about 10 years ago. I was in a different industry that was involved automotive and finance and things of that nature. And once when we were liquidated our holdings in those areas, my son actually is the one who got me started in it. He owns jewelry stores and gold and silver stores in Dallas, Texas, and I went to visit with him one day, and we were sitting and talking, and I was trying to decide what I was going to do. And I just found it very interesting because it falls in line with what I was doing before in finance. It's just a different avenue of it, investment type things. And so we just decided, my wife and I decided to open up Gold Rush and start going from here. Prior to that, I was not a gold or silver collector. You know, I was a market guy. I was, you know, things of that nature, because in my era, you know, growing up, it was not, gold and silver was not something that was much talked about or utilized. Now, our parents and our grandparents did, because it was actually their form of exchange of currency.
Right.
Silver certificates, coins, dimes. But by the time I came around and growing up, it was all about, you know, the U.S. greenback and making that. So, but you know, it goes hand in hand. But that's how I got started. Was, you know, my son introduced me to it, and I saw the opportunity. This was in 2007, so it was before gold and silver just starting to move. It was before it really started making its gain and momentum. But by 2010, it was in the 800s, 900s. You know, when I started, it was $500 to $600. Silver was, you know, $4 to $5. So, you know, I've seen it move from that point to the highs of 19 and 50, and seen it down to, you know, silver being in the 13s again, you know, back to 2010-11 prices. So, and that's another interesting thing I want to tell your viewers is, you know, if you look at where we were going into 2008, and you look at the stock market crash that took place, that eliminated a lot of wealth in the country, and which put a lot of emphasis on gold and silver, and you look at the pricing structure as a relationship to the market, it's almost a mimic. I mean, if you go from 2001 to 2008 and you look at the market trends and how it's grown, and the same with silver and gold, and then you go from 2008 to 2018, and we're in that dip and rise that's equivalent to a 2010 and 11 era. So, if you go from 2010 to 2015 and look and see what gold and silver did, it's my expectation that over the next 2 years, we're going to see a lot of that same similar trend lines being met that went through 2011, 12, and 13. Now, I'm not saying the price is going to go to 1900 and 2000 and silver is going to be 50 an ounce. But what I am saying is that the pricing structure of it from where it's starting at has nowhere to go but up from here due to the unstableness of our economy and the market. Just because the market has performed well in the last 6 years does not mean that it'll last forever. If you go back to 2001 after Twin Towers here in the United States, where that was a major hit to our financial market, that's when we started seeing zero rates being brought out in order to spur the economy. From that point on, everything was a bubble, and it went into finance, mortgage financing, subprime financing, subprime auto financing, the recreational industry, people buying four-wheelers and side-by-sides and a boat, and there was just so much financing going on because there was so much cheap dollars going into the market. Well, by 2006 and 2007, that started playing out because they started raising rates a little bit progressively, and the federal government stopped supporting the subsidies that was going out in order to spur the market through lending. And as a result of that, we had a liquidity issue. There wasn't enough capital in the marketplace to maintain that stability. People can't continue to borrow themselves beyond borrowing, And so at the end of the day, we're in that same boat now. 2008, which was a world financial crash, has created the same thing. The central banks out there have been printing tons of money. The United States has printed less than most other countries, mainly because we're the U.S. dollar that is the world reserve. So we have some privileges, but we also have some responsibilities out there too, to the rest of the world to answer to. Places like Venezuela, they don't answer to nobody but Venezuela. And that's why they're in the position they're in, because they overstimulate their economy. When you look at the track record of how bubbles exist and what causes them, a bubble never makes a bubble without there previously being a bust.
Yikes.
That's okay. So, that's the thing to look for you silver guys and gold guys out there that are bears or, bulls. It's all about the numbers. That's the only thing that doesn't lie. And history repeats itself. It just may look different. And, crypto was a bubble due to hot money in the system. Once crypto became institutionalized and banks were starting to invest in it is when it started bubbling, because of all the excess cash they have to put into something. And they ride the bubble up and they sell, and then they get out, and the ones left behind are the ones that are the true investors in it. And unfortunately, it creates such a bubble that now the true investor can't invest because the pricing is too high. So they don't have anybody to sell it to, so the price has to keep coming down until it gets back to its natural level of a real investor. And that's what we're seeing going on with Bitcoin right now. So, but that's it. As far as a rude customer, I take the perspective there is not one. I do know that there are people that can have certain attitudes. You just never know which side of the bed they woke up on, that day. But I have had, a number of situations where I could have just as soon not do business with that person as to do business with them.
And besides, anyway, I've got to point this out because it's not really shown on camera, but we are in Texas, so we do have some attitude adjusters.
Yes.
I see one on your hip there.
Oh yeah. I don't leave home without it.
I had to point that out. Okay, so we got a question from Vulcan5678 and another one named Silver Vessel. These two are both pourers from Metals Mafia and really good friends of mine. What is the best day of the week to come out to sell silver? How do you test silver and gold? We kind of answered that one. What would you pay for a 1 ounce round, and what would you pay for a 1 ounce poured bar?
Okay, so the pricing of the 1 ounce, I'll start with that one because it'll lead into the other ones, but the pricing of the 1 ounce round is typically spot price on the sale side. Usually if you look at the market, there'll always be about a 10-cent variance between the ask and the sale. And so, you know, it's going to stay right around there. However, supply and demand has a lot to do with that as well, as like I said, because there was a time when I was paying $2 and $3 over spot just for a generic round. We were paying $4 to $5 over spot for Silver Eagles, but that's because they were on such a back order that physical in hand, people were willing to come down and lay down $6 over spot to get them, you know, and have them in hand, you know, because you don't own it unless you got it.
Right.
You know, so, you know, the pricing on it is pretty standard based on the market. You know, you can only give as little or get as much as what the market will allow. But we keep a pretty standard pricing structure here. The best day of the week to sell, if you go back and look again, and I'm going to encourage you guys to get out there and do a little more research through pulling up charts and historical charts on gold and silver. It's a little harder to find daily charts, you know, but you can find weekly and monthly charts. But if you watch the price of gold and silver, typically the overseas market and the weekend market, it really dictates the beginning of our market here. Because you have the Asian market that opens on Sunday afternoon when our markets are closed, and you have the European following in, and then you have our market. And if you watch, typically, if you're selling and you're wanting to watch it prime times during the week to sell, typically if Monday opens and it's you've already seen the market start moving in a downward motion on Sunday or night through those two other markets, excuse me, then typically Monday's going to follow suit here because the bears are trying to control the price of silver and keep it down, or gold and keep it down. So, but as you move into the week, in periods where there's a lot of economic news coming out, like for example when the rates come up, when feds get to the point they're starting to announce their rate increases or decreases, the market is so drawn to that because if they raise the rates, it means it makes the dollar stronger, so people start buying more treasuries and things of that nature, and that puts pressure on gold and silver, and typically you'll see in those periods those prices will come down. So, but if there's anticipation out there that they're not going to raise rates and they're not going to have as many rate increases through the year, then what you find is they start getting bullish on gold and silver. Okay, but if I had to say any one particular day, it would be Thursdays and Fridays, because if you look, Fridays have more of an upswing over the spot price in consistency. Not saying that there's not news that comes out on Wednesday that hammers it for the weekend, but if you look at consistencies, the end of the week tends to have ticks up, just like today. Today's Friday. Gold 2 days ago was 1627. Yesterday morning it was 1627. Today it's 1645. But that's because they're preparing for a long weekend, the holiday weekend coming up, and so they get a little more bullish in buying in the market, which pushes the pricing up. You know, so. But I would say the end of the week is typically a better time to sell, and your first to midweek is a better time to buy, historically.
Okay, cool. That's good to know. That's really good to know. The next question is from Eric. I thought he was from the UK, but I believe he told me he's actually from New York. So sorry, Eric. I hope I got that right. I'm
Don't
sure
worry
you'll,
about it.
yeah, I'm sure you'll get me in the comments if I didn't. But who is your average customer? As varied as the public is, are they mostly young to middle-aged men and women?
You know, 5 years ago, the majority of my customers were what I call gray hairs. People with money to stash, looking for a place to keep it and store it. And the collectors too, because they're typically the older element that is familiar with the coins and have always been collecting their whole year, their whole life, and they're the ones that when they clean their pockets out, they look through it and take the silver quarters and put in a tin box and throw the other ones in a drawer. So that was, but I would say over the last 3 years, I've seen a much broader span of customer base. I'm seeing a lot more 30-year-olds, 28-year-olds. I even have some teenagers, young boys that come in with their parents that are getting into it. They like to get in. They're looking for the different half dimes and different coins like that to start collecting. So today I would say it's a much more versatile group of people buying. And I do, I have buyers that will put in orders of $200,000 at a time.
Wow.
That are closing out money markets, or they just sold a big piece of land, or whatever it is. And we're in an oil-rich country here, so a lot of the wealth in this area is dictated through oil and gas prices. So through 2013 up to about a year and a half ago, oil and gas were extremely strong, and there was a lot of work here. And so, I had a lot of oil field work guys that, that married with kids that normally weren't interested in gold and silver in the past, but they've got extra change in their pocket, and their dad told them about it, and so they decided they want to start, stacking silver. So it's a pretty wide range of customer base that we have here. We do, a fairly amount of marketing. So, and most of the marketing we do is educational marketing. It's things to bring people up to speed on what's going on with the market and things of that nature. So it creates more interest as well from a diverse group. And I have guys that come in here out every paycheck, every Friday or Saturday. They'll come in and buy one silver round, and they've been doing it for 4 years. Well, you figure that up, that adds up.
It all adds up.
52 ounces a year, all of a sudden they look up, they've got 300 or 400 ounces stacked back.
And I'm really starting to notice kind of that trend in watching the silver community as well. There's a lot of younger people out there starting to collect and stack. Yeah. I wish I could remember some of the examples in channel names, but I just don't right now. But they're out there, and there's becoming more and more of them.
And the internet helps that with things like you guys are doing. This is a very educational type, support group. It helps people get in when they're starting. They ain't getting questions answered that they probably couldn't before. So, having access to the information and the ease of it through internet and the sharing of groups like this with information, it just gives more people more confidence. And the most reason people don't invest in things is lack of confidence.
Right.
They don't get into the market because they don't understand it. Once people start understanding what the concept is that they're looking to create for themselves. And so when I get a new client, the first thing I do is don't ask them how much you want to spend. I don't ask them, what you're interested in as far as the kind of coins. What I ask them is what's your overall goal? What are you wishing to accomplish out of this transaction? And most of them say, well, I really don't know because I don't know anything about it. I just, know that what's going on now is scary, and I hear people talk about gold and silver, and that's why I'm trying to find out more. So, when I get a new client, I would say probably 30, 45 minutes of our conversation has more to do with what their goals are.
Right.
And then I can fit their portfolio to do that. So, for all you collectors out there, just remember, you want an equal portfolio. You don't want it all in collectibles. You don't want it all in mint state stuff. You want to be able to make a diversified portfolio because, for example, like I mentioned earlier, you let Eagles go on back order instead of you paying $3 over spot to buy them, $3 or $4 over spot to buy them, you may get $5 or $6 over spot to sell them. But if you had a round and silver, say, goes to 20, And there's a short on eagles, and you can get 24, 25 for an eagle, but you're still only going to get spot for that round. So, in that time, if you wanted to sell to raise capital, sell the thing that's going to give you the highest premium back, not your spot stuff. But in the reverse of that, if you're in a downward market and you're only getting a buck over spot for an eagle and you're paying 3, and you can still get spot for a round, and you want to gain a couple $100 or whatever it is you want to sell, then sell your round. So, but you need to have both those in a portfolio in a fair mix in order to be able to support the time to sell. Because it's not all just about the price of silver when you sell, it's about the premium that you could possibly gain in that type of situation.
Yeah, that's really good information, because I think a lot of people get confused about the premiums.
Yeah, and premiums, the reason the premium's higher on an eagle or a Canadian maple leaf or anything else is because it's the central bank that's producing those. The Federal Reserve produces those, and they don't do anything cheap. And 2, they have a set number they're going to produce that year. And once they hit that number, it's over with. I mean, that's why when silver eagles were on back order, part of that was because they had to quit taking orders in August of that year, and you didn't have new ones coming out until February of the next year. So you had about a 4-month gap there before there'd be any true availability of fresh minted stuff coming out of the mint. Whereas with rounds or bars, as long as they can get more machines in there and hire people to run them and go 24/7, they can stamp those out as long as they got a silver supply until demand runs short. So there is benefit in coins, when it comes to those type things. Collectible coins, that's more of a personal, something that someone has a personal interest in, no different than collecting arrowheads or pocket knives or guns or anything else. And there are value in those, but typically the gain on those is very long term. It's less related to the price of silver and gold, but more related to the demand for that particular collectible piece. Because I have a lot of people come in, that get into it new. They've gone online and bought from some online company, I won't name names, and then they get bombarded with telephone calls. Hey, I got this. I've got this Liberty Head quarter ounce of gold, that's from 1902, and it's so collectible, it's so old. If you take that coin now and go sell in the markets, you're going to get spot gold price for it. But they're paying $200 premium for it to buy it because they were told it was an old collectible.
Right.
So, it's not saying that that's bad on the collection side. I'm just saying that, you want to offset some purity stuff and stacking stuff, what we call stacking material, along with that.
Exactly. And I have one final question. This one comes from Salivate Metal. Salivate Metal is a huge channel in the community. He's a great guy too. He's funny. I love Sal. Out of all the coins you've bought to resell, what was your favorite find that you kept for your collection, if you collect?
Well, let's see. I've had so many coins come through, and of course this is my business, so I don't fall in love with any of them. The one that I will say that was probably the hardest for me to sell, and I only sold it because it was a very good client of mine, and I had it on display here, and it was a Spanish doubloon.
Oh wow!
That was recovered from the shipwreck during the Spanish-American War. And the story behind it goes that when we were in the Spanish-American War here, the Spanish government was having problems with, they were losing the war here, and a lot of that had to do is because they couldn't buy food, they didn't have ammunitions, they were running out of guns, and their troops were starving because they didn't have any money. Well, they couldn't use currency that was being circulated here. So they, loaded down this ship with all this, Spanish silver to come into the port of New Orleans to service this area down here. Well, somewhere along that way, that ship sank through through weather or whatever related issues it was, but it sank, and so these coins stayed in the bottom of the ocean for years and years, 100 years or more. And it had recently been found, I think in the 80s is when they found this shipwreck, and they had all these stamped Spanish doubloons there. And so it came with a little kit, a little story about what happened and all. But the kicker to that is they attribute a large amount of the success of the American success during that war with the fact that shipment never made it, because they were unable to secure the extra ammunitions and guns they needed to supply the forces down in this area, and therefore we were able to overpower them. So they say that history could have been changed if that port would have been made by that ship, and that silver would have been offloaded. So that was probably the most unique piece because of the story with it, not just from and it was worth a little bit, but it wasn't an extremely high value coin. But in the display case with the story behind it and being here, it had a lot more value to it than just the price of the silver.
Right. The historical value of it kind of outweighed any spot price
Yes.
silver had at that time.
Yes, but I did have a 1883 Carson City. 1888 Carson City come through that was a mint state 63, I think, and it had a $5,000 or $6,000 value.
Wow.
That's probably been the most expensive coin that individual collector's coin that I dealt with. But other than that, the rest of it is I buy for sale.
Right.
That's the perils of having to make a living doing it.
You
don't get the choice of keeping a lot of that stuff when money comes involved with it.
Well, that does it for viewer questions. I do have one question of my own, only because I know that half of these viewers are going to come back and ask.
Okay.
They are gun enthusiasts, so what are you wearing as your sidearm?
It's a Taurus 45.
Taurus 45?
Yeah,
Okay.
hollow points. And,
Okay.
And I have people also ask, well, why do you wear it crossways? Because normally, they wear it there, and it's mostly because it's there for a protection. I hope to never use it, and thus far in 10 years I've never had to. But these are close quarters, so it's a lot easier to protect it bending over where I can get to it, as opposed to someone coming up behind me and grabbing it, or being able to get to it if they're close counters in front of me. So for anybody out there, I'm not a gunslinger. I just do it for safety reasons.
I think that's what a lot of people outside of Texas think, that we're all gunslingers down here.
Yeah.
But, hey, that's part of us.
Yeah, that's the history.
We're kind people, but we don't like to take a whole lot of
Well, we're not going to put ourselves in a position where we're on the downside.
That's right. That's right. Well, Spencer, I'd really appreciate this. Like I said, it's rare that you get to shoot inside of a local coin shop, and much less interview the owner. So greatly appreciate it. Thank you so much, man. This has been a lot of fun.
You're welcome. I'm enthused to do it. I hope a little bit of information out there and entertainment that your guys watch or enjoy it.
There's a lot of information in there, and I can't wait to get this out there so everybody can see this.
Well, thank y'all for letting me be a part of your community.
And I'm sure they greatly appreciate it. So everybody, thanks for tuning in. I'm glad you got to meet Spencer and hear all the great information he put out to the community. Thanks for watching. Please like and subscribe, and stack on, my friends.